All right, hello, and welcome to Camel Finance. I'm your boy Camel, and it's going to be a little bit of a short one today because I have got a lot of plans over this weekend and into Monday. I want to open with a bit of a joke today. Like, I find it amusing how all the bears who have hated the Fed for years and complained about Fed intervention in markets are now all begging the Fed to put a stop to this market rally. So again, it just goes to show, I say it over and over again, you can't have any emotions, you can't have any bias. There's no point paying attention to the mainstream narrative or any narrative. You just have to look at the charts, and the charts will tell you what to do. The thing we need to look out for today is at 8:30 a.m. Eastern Time, which I believe is 1:30 GMT. And that thing is the PCE data. PCE data is a primary inflation gauge. So get ready for some volatility, because if this is high, that is really going to put a quick and swift end to this stock market rally. Conversely, of course, if it shows that inflation has come off significantly, then we can expect the rally to start to get some true follow through. So it'll be important to pay attention to this metric. I'm hoping it will be lower, and that will support my breakouts. Otherwise, things might get quite ugly quite quickly. Remember though, the economy is not the stock market, and vice versa. Leading economic indicators having negative correlation with the 6-month forward S&P 500 returns historically. So the point here, remember that the market tends to bottom well in advance of the economic bottom. So sitting here and saying, yeah, well, the economy's not finished bottoming yet, is a moot point. It's a null and void argument. The stock market is forward-looking and usually bottoms well ahead of the economy. So you can pause your screen here and check that out if you want to. Small traders remain underexposed to this market in the event of upside. Remember, the average retail trader is bearish. They are short. They are not prepared for a move to the upside. This is counterintuitive relative to the breakouts that we've been seeing in the charts. What's most significant is the weekly closes. If we happen to close on a weekly candle after today's session above these breakout lines, then we can say with significantly increased confidence that the bottom is likely behind us and we have a good chance of rallying into next week. In March, the Fed will likely stop hiking and the Fed funds rate will be at 4.75%. There's a wrong notion that the S&P can't rise with interest rates that high. In June 2006, the Fed stopped hiking at 5.25% and the S&P went up 24% over the next 16 months before the 2008 recession started. And you can see that here. Again, there's plenty of narratives out there. There's plenty of reasons to be bearish. There's plenty of things being printed in the mainstream media. But the charts tell the truth. And the charts suggest we are going up soon. If you look at the S&P 500, this is what I'm talking about. Okay, we're above the 200-day moving average. We are above the trendline breakout. Clear this prior local high from back here, and FOMO will indeed be kicking in. It does not mean, of course, that we couldn't roll over. This couldn't end up being a trap. But we take out this local high here, and believe me, it's game on for some rallying. Hopping over to Bitcoin, the realized return just popped positive. So the sellers are now taking profit, which is symbolized by a green dot, instead of cutting their losses, which is what you see when we're in the blue dots. This is a big difference. This is indicative of the start of an uptrend. Strike has partnered with retail payments giant Clover to integrate Bitcoin Lightning Network. And remember, Clover has 6 million merchants globally. So this thing is going to become much more like a usable currency. This thing is going to reach massive adoption. And we're seeing this sort of news all the time just lately. I think this cycle is going to be absolutely mind-blowing. The Bitcoin realized profit and loss ratio is showing signs of profit for the first time since the FTX collapse. And you can see that here in the green. Again, indicative that we may well have left this bear market behind us. And Bitcoin is up 34% since the Bank of England governor said that investors in Bitcoin should be prepared to lose all of your money in Bitcoin and crypto. So is this sheer incompetence, or do they just not want you to hold Bitcoin? I suspect it's the latter. Did you know Bitcoin's market cap has surpassed the GDP of Iran? Do you see the pattern here? This thing is exploding. And speaking of exploding, look at the hash rate. The hash rate has set yet another record, another all-time high for hash rate, meaning there are more miners connected to this network. The network is harder to hack than it's ever been, meaning the money on the Bitcoin network is the most secure form of money on the planet. Remember, Bitcoin is the only secure database on the planet. Moving into some technicals, look at Bitcoin Go, okay? Golden cross approaching. The 50-day moving average is about to cross above the 200-day moving average. Now, I've been saying for a couple of days, I think pretty much all of this week, that we should be open to a half cycle low, which is due around the 29th, and it can swing a few days either side of that. So I would not be surprised if we get a shakeout move that traps a few shorts and we get this sort of drop into a half cycle low. But I do believe if that is to occur, it will then resolve to the upside. So if I was thinking about getting a position here, I would be personally playing patient to see if we get a drop into a half cycle low. And that would be perfectly within the normal price action for Bitcoin. I'm not going to spend too much time on charts because I'm just going to end up repeating myself a lot. What I will say is I will show you a few significant changes. And then once we've seen the closes this week, I will put out a video over the weekend where we examine the closes and look forward to the week ahead. I'll make sure I mention any significant changes. But for now, the dollar is still weak, so no changes there. The metals are still benefiting from this weakness in the dollar. Bitcoin and crypto, like I've said, I'm kind of expecting to see some level of dip. How deep it goes, I don't know, but I would be more surprised if we don't get a half cycle low shakeout than if we do. So that's what I'm expecting for crypto. But I think once we get past sort of the 30th or into February, then we will likely be able to resume this rally to the upside for Bitcoin and crypto. The yields, I think, have got a little bit more chopping to do around until we can get through FOMC, and then I'm pretty sure they're going to resolve to the downside. Of course, the Fed can spoil the party, but they haven't spoiled it yet. The only other couple of things I want to point out here is that the VIX continues to compress. So again, this does not speak to a volatility event, and this still does not speak to a stock market crash. Of course, that can change, and it can change quickly. The last couple of things I just want to point out and show you and say, look at this, is first of all, the NASDAQ. This looks to me like breakout retest resumption. Now, we lose this trend line here, and we can start to doubt whether this breakout is for real. But all the time we're above this, I think it's game on for a breakout. And the same is true of the S&P 500. We could draw this line in a few different ways. You could be stricter and draw something like this. It's entirely up to you, but hard to make the case that this is anything other than breakout retest resumption at that point. Of course, it can roll over. PCE data coming out later on today could certainly spoil this party. The Fed next week at FOMC could also certainly spoil this party. But for now, things continue to look constructive. And all we can do as traders is take everything one day at a time with a flexible, unbiased and open mind. So that's it from me today. I've got a bunch of stuff I've got to take care of today and over the weekend. It's the wife-to-be's birthday, so I'm going to be sorting that out. I've left it pretty late. I haven't even got a card. Don't tell her. So I've got to take care of all of that. I will, like I said, I'll wait for the closes today. I'll make sure I cover the PCE data in the video that comes out either tomorrow or Sunday. As always, I'm not looking to take on any weekend risk or additional positioning over the weekend. I'm happy to hold all of my open positions over the weekend, but I'm certainly not looking to open any new ones today. If you're brand new here and you want to see all the positions and the TA and all of that stuff, you go back and check any of the videos this week. All of that is still valid and still holds. So in the meantime, thank you for watching. Put a like on the video if you enjoyed it. Put a dislike if you didn't. Make sure you subscribe with the notifications turned on if you want to continue to get updates on all of my trades for free. In the meantime, enjoy your weekend. Take care from me. I wish you all the best. Cheers. Bye.